Thank you for joining us again here at Perpetual Assets. We are very happy to be joined again by Mr. David Morgan of the silverinvestor.com. David, thank you so much for setting the time aside for us on a Friday afternoon or Friday morning, sir.
Well, my pleasure. Thank you, guys.
I wanted to start off by thanking you for we've been offering it now for a while, and you've done a hell of a job promoting it yourself and getting the word out about it. The metals card through Dale, and we just wanted to thank you so much for getting the word out there. It's a fantastic solution, and our clients have been thrilled with it.
Well, great. Now I can just jump on that a little bit and explain some more about it, which I know you have. But I tried actually with one of my banking friends in Vancouver, BC, for quite some time to initiate a metals-backed debit card, and we basically had it fairly much set up, but there had to be some guarantees in the contract that I wasn't willing to sign because it was impossible to make that kind of guarantee. And it was basically the amount of signups there would be for this, precious metals debit card. So I spoke about the Utah bill that was enacted a few years back at the Silver Summit, 2 years ago or so. And Dale Olmsted heard it, and I talked about, now that this is implemented in the state of Utah, I can envision a day where you take a debit card out, you make a transaction at any, gas station or grocery store or whatever, and you debit a certain amount of silver or gold, platinum, palladium for that matter out of your account. And no one's wiser, really, because you're paying for it through the, banking system, but you're paying in metal. And Dale heard that and came up after I gave the speech and said this is a dream of his, and basically implemented it within a few months after that. And, this is something I was not able to accomplish. And so I commend him for that. And secondly, I just want to also state that the simplicity of the card is, to my thinking, rather brilliant. And I don't want to overspeak it, but what he's done is he allows you to deposit gold, silver, a combination of, you could even use platinum, palladium with him. Of course, it's audited every month. But you also have a cash side of the debit card like any debit card anywhere. And so you could fund the debit card without metal if you wanted to. You could just open up a precious metals debit card and in theory just add the metal later or buy the metal from Dale if you wish to. But you could use it as a standard debit card. And that's what I find fascinating, because what I've done personally is I actually brought, physical silver down there because he's in the same town as I am, put it on deposit and started making small purchases basically just to test the system. And it worked fine. And then Dale reminded me that you could, run a cash balance as well. So what I've done since, the silver that I put in the account was well above the $20 we're currently at, I just hold that in reserve, and I, fund it on a cash basis and use it as any debit card anywhere. So I just wanted to emphasize that, because some people think that if they obtain a precious metals debit card that they're immediately, debiting out the metal, and that isn't the case. You can definitely set it up in the manner I just described.
Well, yeah, and conceptually, there's so many different uses for it, both from a consumer side. I just used mine yesterday to pay for my dentist. So the first thing I think of when us as a firm are going to offer something, a solution, be it a product or a service, is will I use it myself, and do I use it, because I wouldn't push anything off to clients that I wouldn't use myself. And we do have one. I have a card. You have a card. Will has my business partner Will has a card. So we're fans of it. We use it ourselves, and that's why we started offering it. It's an awesome concept. Dale is absolutely fantastic, and it's you're right. It's brilliant and simplistic. And the fact that it's not tied to, you have banking access and, Visa, MasterCard access, but your bullion is not, held by bankers, also makes people feel very warm and fuzzy about it as well.
Exactly. And if I could just go, maybe one step further, the biggest question I've gotten over the years is, well, I'm I believe what you're saying, David, but how do you sell it? How do you sell your silver? How do you sell your gold? Well, this is, what James Turk has, said often at some of the conferences that I've done with him. It's like, well, what are we going to do at the top? And he says, you're going to spend it. So this is the perfect way. You could buy silver from Dale or ship your own or buy it from a different dealer. You don't have to buy it through Dale. And you could buy silver at $20, right now, put it in your account and not spend it until silver hit 30 or 40 or 50 or whatever it's going to go to. So anyway, I probably beat that one to death, but I really do think it's something whose time has come, and very few people still are really aware that it exists.
Right. You touched on something earlier where you met Dale, et cetera, at the Silver Summit, and that's another reason I wanted to reach out and get you on. You will be speaking again this year. Me and Will be coming down as a firm as well. Can you go ahead and tell our listeners and viewers about the Silver Summit and its background, et cetera?
Sure. The Silver Summit is something that myself and a small stock company, Silver Stock CEO, and I thought about many, many years ago. And really, the having an idea is good, but there are great ideas out there every day, and very few of them are really implemented. And I had the idea along with Ray DeMott, and it was just that. But, Ray's a doer, such as myself, but, left just to me, I probably never would have got off the ground. So Shauna Hillman and David Bond got involved immediately. And really, without Shauna and David, it never really would have come to fruition. But through them, it did. And, we started it, I think it's been 11 years now. I think this will be the 12th year. And it's growing quite a bit. It's roughly about 1,000 attendees. It's the 23rd and 24th of October this year. Starts early, 7 a.m., runs to about 6 p.m. both days. It's at the Davenport Hotel here in Spokane, Washington. And if you've never been to the Davenport, it's something to behold in and of itself. It's about a 19th century vintage hotel that's been totally restored. And I know you've been there, Gus, so, I think it speaks for itself as far as what the, how classy or how interesting the hotel is itself. And, the usual cast of characters will be there. We'll have, Bob Moriarty, Peter Spina, Bix Weir, Jeff Christian, who's, more on the establishment side. And we always invite Jeffrey Christian, because, he gives a different perspective on the silver market than probably most of the speakers. David Madd from A. Mark Precious Metals is speaking this year for the first time. So that's the list of speakers currently. And there will be added, more here in the next couple of months. A lot of silver companies, I can't read them all, but many. My friend from Swiss Metal Incorporated that does strategic metals. These are not rare earth elements. These are strategic metals. Has a very interesting all metals program, 4 different categories. He'll be speaking, and it's something that I'm involved with. I think it's a way to diversify within the metal sector into a hard asset. So that's about it. We'll be, putting it out to our database when the time's appropriate, which will be, rather soon now.
And as you said, I couldn't agree more. The hotel and accommodations are top notch. Beautiful hotel, fantastic restaurants within, fantastic bar areas within, top notch speakers, and for love of God, it's an ounce of silver to attend. So it's the most reasonably priced show out there. If you're to all our listeners and viewers, if you're literally show up with a 1 ounce silver eagle and come to the show, you're not going to find a better bargain out there from a show perspective.
Exactly. Well, thanks. Of course, I'm biased. It was one of, an idea of mine. It was implemented by, again, David Bond and Shauna Hillman. It's, by the way, it's owned by Cambridge House now. David and Shauna sold it to Cambridge House a few years ago. And in a way, it's gotten, different, but probably more, streamlined in some areas. But anyway, it is what it is. It's a great show. It's the only silver-focused event of this size, I think, anywhere in the world. And it draws people from all over. The first one we did way back, I guess, 12 years ago, although it was small in attendance the first year, it was huge in breadth. I mean, we had Germany, South America, Australia, Netherlands. Not sure about Russia, but I mean, we had just, it was unbelievable where these people came from. I mean, these silver bulls, in some ways, again, opinion, are further reaching and perhaps even more tenacious than the gold bulls are.
Yeah, and I'll agree with you to the extent that there's a lot of conviction in the silver community. There almost has to be to ride out the volatility.
True. Yeah, I agree.
And yeah, we met every time I've been. You meet people. I've met people from South America, Asia, et cetera. It's a really good turnout and a fantastic crowd. We've had clients inquire lately about the old silver fix versus the new silver fix, et cetera. Can you dive into that a little bit for the listeners?
Certainly. I've been reserved. I said I wasn't really going to comment much on it. I wanted to wait and see. I mean, my thoughts, although I didn't state them, were that it isn't going to make much difference at all. Usually when the authorities make a change like that, they've thought it through and, what's going to take place. And this is basically the case. I mean, there was a lot of writing on the internet. In fact, there's one at Gold Silver Worlds, Can the New Silver Fix End the Ongoing Silver Price Manipulation? And the article goes through, the possibility that it might, but the situation, of course, is that it hasn't. In fact, the first day that the silver fix ended and the new silver price was determined by Thomson Reuters and others, it dropped 35 cents. And they're very, forthright in what they do. I mean, they explain that what they do is they determine a price. And if you read it and understand what they're saying, it's a paper price, as it's always been. It's not really a physical demand price. And, of course, they match most of the time. I mean, I'd be disingenuous to say that, when silver's priced at, $20 an ounce, that you can't buy it for $20 an ounce, because you can. I mean, that price, however it's set, you could take delivery off the COMEX at that price and some fees. I think a lot of people that aren't in the market and actually experienced the market and actually bought physical metal don't understand that that price is a price that in some ways is theoretical, because even if you buy it off the exchange and you lock in your price, you still have to pay a fee to the broker to close out the contract. You have to pony up the full amount, because on a futures basis you're only putting in part of the money. And then you have, after paying the paperwork, you've got to get it transported to you. So you have to pay for transportation. So the fee adds on to the ultimate cost, and this is true of anything. I mean, this is true if you took a contract of wheat or anything else. But roughly what I'm saying is that, yes, those two match most of the time, but we have seen instances. What's not really known, I think, is how much physical silver demand there's been since the financial crisis of 2008. It's increased rather dramatically, and this has been primarily through the individual market, the individual, not by your big silver ETFs or Central Fund of Canada or Sprott Physical Trust, although they have bought good amounts, but the demand physically has been more, much more after the crisis of 2008. And based on the price alone, you would probably draw the conclusion of the opposite, that, the demand has fallen off since 2008. I think part of the reason that we've seen such a price, I'll call it suppression, is that and I don't stress this enough because I'm not super well studied in it, but I do study it, and that's, the most important commodity of all. There's no doubt about it that, in my mind, that the most important commodity is energy. And that means oil for the most part. And since the United States basically has decreased their energy consumption, and, I'm a contributor to that. I mean, I used to drive a truck that got about 10 miles to the gallon. I have a diesel Volkswagen now. It gets about 40 miles to the gallon. And I work from home most of the time. So my, consumption of oil has decreased substantially. And, I'm not just talking about myself, I'm using it as an example. But the country has dropped their consumption of gas substantially from what it was a few years ago. So that's one. And, of course, the second part is this fracking phenomena that's taking hold that has added to the supply of the United States. Basically, we use 22 million gallons a day, I think it is, and produce about 5 million, and that's increased by a couple million a day here in the last few years due to the fracking phenomena. I still think that there is going to be an energy crunch down the road. I don't think that this fracking situation is all that it's fracked up to be. But nonetheless, I think this has been a driver for the stock market, because basically if the wealth of a country, the wealth of an individual, the wealth of a nation state or a city or anything is what's called energy flux density. And that's just a very sophisticated way of saying how much energy can I use on a per person basis or per city basis. And the more energy you have per capita, the more energy you have per person, the higher productivity rate you have, the higher education rate you have. Basically, everything revolves around energy. So we've had this, I'll call it a mini boom in energy in the United States. This has given, in my view, sort of a false impression. It's delayed the inevitable, but it's given a rather, again, false impression that, happy days are here again. Things are getting better and better. And I think the fracking thing is exaggerated. I mean, it does exist and it has helped, but I think it's more or less a Band-Aid on a pretty big wound that more people are not looking at on a longer-term basis. So I think that's really part of the problem. I'm not, blaming anyone. I'm trying to be objective as always. That what is it that's caused this, huge stock market and all this? And I think it's basically a false belief that, we, the U.S. of A., are, top dogs again because we've solved the energy crisis. No, we haven't. We've delayed it. So I probably got off on a tangent there, Gus, but I think it's important for people to know that's my thinking. As far as the physical silver market's concerned, more and more physical's been bought in 2008 and beyond than we saw prior from 2000 to 2008. So the silver bulls are at it, and once we get some kind of emphasis that what I just said, in other words, that stock market's overvalued, things really aren't going to be that great for that much longer, the reality is going to set in. So once the reality sets in on this economic problem that's just been pushed down the road, it certainly hasn't been solved. When that reality starts to come to the fore and people start to recognize it again as they have before and realize the 2008 crisis really hasn't been solved, then you're going to see a move back in the precious metals. You're going to see a lot of air come out of the general equities market, and you're going to see a big shift. And, of course, the biggest shift comes with these fund managers that they don't care really where they invest as long as they're making money. So once the precious metals become popular again, we could see them start to grind up higher. And once it gets over certain technical levels, then you'll see the momentum players, again, the fund managers, come in and start to push the metals far higher because they move so much money. And the metals, of course, as we both know, are rather small markets relative to the debt markets, the equity markets, the insurance industry, or anything else.
I'm actually glad that you did touch on the energy thing, because we, in our sector, in our vertical, be it commodities, or metal, we're so often focused on geopolitical events, geopolitical sovereign risk, etc. So parlaying metal and energy, and not to go off in another direction altogether, but there's so many different conflicts around the globe right now. Not only from a metal perspective, but from an energy perspective. What are you seeing? What worries you? Is it Ukraine? Is it Syria? Is it Iraq? Is it Libya? There's so many to choose from. What are some red flags that you see happening around the globe?
Well, all of the above. It's an area that I don't spend a great deal of time on. I certainly need to be aware of it because it affects, metals prices, etc. what flabbergasts me is that there are so many conflicts in the Middle East and the Ukraine and what's Russia's going on, and closing down McDonald's, which I have to kind of laugh. I'm not a big McDonald's fan anyway, but
they're doing them a favor, right?
Yeah, but anyway, that the metals aren't reacting. They really should be, in my view, but they're not. So I would say, it's really hard to forecast those type of events. There's others that spend a great deal more time and energy in that realm. But again, I do look at it and read about it. I rely on others pretty much. The point I'll make is simple, and that just backs up what you said. I mean, there's a spark waiting, a spark could take off anywhere that you outlined, and maybe someplace that we don't even know. I mean, these tensions are building, and a lot of it has to do with not only political things, but it has to do with resources, and it has to do with currencies. And really, there's a lot of things going on really in the currency wars that really aren't talked about. So it's a subtle shift, really, even though, Russia shutting down, 3 more McDonald's today might be rather humorous. Really, it has to do more with the currency situation back and forth. And this is where I think you're going to see the ultimate battle. I think you're going to see a lot of things that isn't really discussed on a geopolitical front that often, which is cyber warfare, which is currency blocks. And we're seeing this. This is right in front of our face that, these BRICS countries, Russia taking the lead mostly, are taking away or making ways to circumvent the U.S. dollar hegemony that's been so prevalent throughout the last several decades. And they're circumventing the SWIFT system for ultimate settlement between banks. They're building their own type of IMF. And these are fledgling situations that are just beginning. And, of course, like anything, when they start out, they're not going to be very strong, and they're going to have problems. And, they might even appear to be weak. But these things can take hold, and they are. It's the idea that's important. And the idea of trading energy outside of the U.S. dollar and that sticking, especially with the deal that Russia made with China already, down the road, these are significant factors that the dollar is losing the status regardless of how much war is going on to protect it. So these are long-term trends that people really have to pay attention to. And in that long-term trend or that long-term analysis, it's very clear that nothing has been done to solve the major problem, which is the debt bomb that lies somewhere in the future. And when the debt bomb starts to explode, the repercussions will be so monumental that it will be imperative that you'll have precious metals basically in the physical form primarily, but it may be so significant this time around that it will be different this time, meaning that to be able to buy physical precious metal in size will be non-existent, and so the underlying mining equities will actually be taking on a status that they haven't enjoyed since probably the 1970s, where there'll be a proxy for metal in the ground, and because you can buy those in size, and I'm talking about the billion-dollar companies, you'll see significant moves in those type of equities that you haven't seen again for a very, very long time. So that's the long-term view I have. I'm discouraged by the current price action, but, being the silverinvestor.com, certainly I have what I consider a long-term investment in the precious metals. Of course, I have gold, platinum, and palladium, but I'm not that concerned with, the day-to-day action, but it is discouraging. I understand that. Our subscriber base is certainly off, and, it's understandable. And there's subscribers and members that we have that basically, have given up. They've thrown in the towel. And I've been trying, I've always stressed that you don't have to put everything you've got in the precious metals. I mean, I have members that do. I've never advocated that. I basically said, you got to make your own decisions on that. I'm certainly overweighted the metals. But, a 10, 20% allocation is really good for most people because there are other areas to invest in. And, energy being one of them, and, of course, food, water, any commodity. I think we're still in a commodities boom. I think we've had a dip here for a couple of years, but I think it is going to continue onward and upward because the equity markets really are overvalued, and they are due for they're a bubble searching for a pin at this, current time.
Well, I know it's slightly cliche, and merely subjective, but we get asked all the time from clients. I mean, do you think the bottom is in? Do you think it's? I mean, again, I know these people ultimately control the casino, so who knows, right? But subjectively, do you think it's behind us and it's a bull market moving forward?
I do. Be consistent. Whenever you stick your neck out, of course, you can have it chopped off, and I'm sure there's some detractors out there who will love to jump on me if I am wrong. But so far I've been right. I said that the bottom was in over a year ago. I think it was the 23rd of June, 2013. We had the intraday low of 1817. And for over a year now, that has been the low. And I think that is the low. I know we're in the, below 20. But I'm not one of these that thinks that we're due for a, huge washout for the next, 6 to 9 months. The middle of 2015, we're going to see, $15 silver or, $13 silver, or what some of my peer group states. They may be correct. And there's only really one way to objectively look at that, and that is if we get a close below 1817 anywhere in the next, days, weeks, or months, then I'm wrong. But until I'm wrong, I'm right.
That's great.
I think that the sentiment is so negative at this point, and that's one of the indicators I use, that it almost requires at least a pretty good bounce. I'm looking really by the end of September, so we only have about another month of suffering. I think we're going to see October, November, December be bullish for the precious metals, and see some pretty good moves up. But we'll wait and see if I'm correct or not. There is a demand for physical metal at a certain level, and when you can buy it under the cost of production, primary silver producers' costs are around $22 an ounce. There are mines that produce it for less than that, and I know that. But generally speaking, across the board, you're around $23 an ounce, and if you can buy it at 20, you're buying it significantly percentage-wise lower than a primary silver producer can get it out of the ground and manufacture it, or send it to the smelter and smelt it down to 9995. So that's significant. And what that means is that if the price stays under their cost for a long time, they'll curtail their mine back, or the price will come up. One or the other is going to happen. My contention is that silver is more likely to rise in price than for significant mine closures to take place. You got to remember, any demand out there that could be filled in the future when the silver and gold markets start to move again, some of that production is delayed because of the current prices. So this will cause the move up to probably extend longer than it would have if, say, silver was at 30 right now and gold was at, say, 1800. But that's how markets move, regardless of manipulation or not. Markets move on the price dynamics, regardless of how the price was achieved. And this is something to bear in mind at all times. There is not oodles and oodles of silver available at $18 an ounce. This is a fact that most people that are unsophisticated in how markets move don't really seem to realize. That if silver were to get to $16 as an example, it might trade 2 or 3 contracts at that price and immediately be bid back up to 17.5, and the next few bids might take it back up to 18.5. I think if it were to achieve those lows, and I doubt it, I'm on record saying it won't happen, but if I'm wrong, it would be, I believe, on one day or spike low basis, where it would be there and everyone would point and say, oh my goodness, look at that, silver hit 16, but it was only there for like one day. And similarly, what I have to state, and I haven't done it often enough, is this was the case for silver at the $50 level. I mean, that was a one-day event. It wasn't like, you had a week or 2 weeks or 2 months or 3 months to say, silver's been at 50 for a while, and geez, I think I'm going to mosey on down to the coin shop, take this silver I bought at $3 and sell it for 50. No, it was a spike event. It was a momentary high, an intraday high, and on that day, I happened to be in Los Angeles, and the coin dealers, the physical market in Los Angeles, bid back to 35 an ounce. So if you were taking your bags or your candelabra or whatever it was, your silverware, into the shop, you were going to get paid 35 an ounce. And all the dealers kind of got on the phone. They all were at the same price. I know that. And, they network with each other. You could have hedged in the futures market if you had a futures account at 50, but you couldn't have done it in the physical market in L.A. I think there were other people. I think James Cook outfit Investment Rarities. I think they actually were paying pretty close to spot, but that's a guess. I really don't know. I haven't talked to Jim in years, but I'm sure he would tell me what they did. I've been told by others that they paid, I think, pretty close to the 50. But there weren't a lot of places that were, because this market was moving so quickly that these dealers protect themselves. And they do it by, bidding back what they're, willing to offer for somebody that comes, over the counter. I don't want to scare anybody by that. I'm just trying to explain that markets move, how they move, and these one-day events. Perhaps I'm guilty of it myself, of saying, well, silver hit $50 an ounce, which is true, but to give the impression that you had a lot of time to, cash out, you didn't. You had to make a very, very strong decision. In all the years I've been in this market, I've only met about 3 people on the globe that claim, and I believe really, that they were able to get out at the $50 level. But these are futures traders. These are individuals that are, pretty specialized in the commodities futures industry, not necessarily your average investor out there.
Well, and to your point, whenever someone uses the $50 example as an example of why it's been, and that example is more often used as an example of why silver's been negative the last 2 years. My rebuttal to that is usually that people who actually buy physical silver, mathematically, the chances of them buying the only one purchase they've ever made being at, the $50 level is likely zero. So people who bought silver before then or since then, to your point, maybe a few people bought it at 48 or 40, but it's doubtful. Most people bought leading up to that or since then. That's just the way it works. So I don't really let people bait me into that argument, because I think it's an unrealistic argument. To your point, it's there for a few bid asks, right? It's a quick trade and then right back down. And same way, which you brought up the example, same way on the other side. If it does hit a certain level on a dip, it's there, and then it moves. That level's gone on the very next trade. So that is in fact the nature of the markets. Well, Mr. Morgan, you have been far too generous with your time, and it has been an absolute pleasure as always. Why don't you tell our listeners where the best place to find you and follow you, et cetera, is?
Sure. The best place is our website, themorganreport.com. We have a Twitter feed at SilverGuru22 and a YouTube channel, Silver Guru. We have a free once-a-week e-letter you can get on the website, themorganreport.com. And, of course, we have our membership services, which are 3 levels, which are explained on the website itself, so you can just hit the subscribe button. By the way, it's a 30-day money-back guarantee, so people sometimes ask, well, what do I get? I could explain all day what you get. The best way, if you're really interested, is to sign up and read it for 30 days, because what's on there, it'd take me a half hour to explain all the stuff that's available, and try it. And if you don't like it, by law, we're required to refund your money. If you do, and most do, then you're a member, and you could try it for 6 months. I mean, it's really like, $10 a month. I mean, it's a couple Starbucks coffees a month. I mean, if you can afford a couple of Starbucks coffee, you could afford a newsletter. So, it's priced at the beginner level, or I should say beginner level. It's more than beginner. It's not a beginner newsletter. I should emphasize that as well. Unless you understand financial terms and know something about the metals markets, you're probably better off with some, general newsletter from one of the establishments. But if you're really into understanding the true nature of economics and what's really going on, have an Austrian school type of mentality that you really want to know the truth, then certainly the Silver Investor is a place where you could get that kind of analysis in the money, metals, and mining sector of this industry.
And that'll soon be the price of just one Starbucks coffee also. The way coffee's moving lately. Thank you again. See you at Silver Summit, Mr. Morgan. And again, pleasure as always.
My pleasure. Thank you, Gus.
Be well.